We are good to go. For a majority of you, if you are actually watching and you're not in your car taking your dog for a walk or on the treadmill, you will recognize these beautiful, beautiful faces that are on the couch with me. But for the new people that are in the world of the Jazz Takhar podcast, I will spend a couple of seconds introducing this gentleman right to the right of me. Ooh. The bald-headed but yet beautiful Mr. SimeonPapailias, a.k.a. my business partner for now, coming up to, where we at, brother? 20 years, almost doing this together.
18.
I don't know if I made this joke or if you came up with it.
18 years.
You're the second spouse I never really needed in my life, but...
Who's the first?
Yeah, well... I love my wife. You know that.
Can you go backwards on the show?
No, not at all. Not at all. My wife knows. Mr. SimeonPapailias, co-founder with me at REC Canada. The gentleman to the right of him, none other than Mr. Christopher Slightham, broker of record, but so much more of that in the world of Royal LePage Signature, which houses now over 1,500 realtors. I emphasize that because I do know a lot of people in this industry that have a lot of agents in their brokerages, and they're very good at what they do. And then I know a lot of people, including Simeon, including myself, that love the world of real estate, like the market and, finding opportunities and certain strategies. But I've said this before, and I think he's heard me say it, but maybe I haven't said it on air. I yet have not come across anyone who has the hybrid of both, the ability to know the market as well as he knows it because he's been doing it for such a long time, and not because he's old, but his family has been in this industry for coming up to, I believe, 6 decades now. But then also have such a large organization of real estate agents and real estate professionals, i.e. mortgage brokers as well. And so I've never yet come across somebody who has the hybrid of both. And so, Christopher, as always, I'm so thankful for your time because I know how busy you are, but you always give us the love, myself and Simeon. How you doing, first and foremost?
I'm great, and thanks for having me. Appreciate it. Love chatting real estate. So always make time for that, that's for sure.
I was talking to the team yesterday when I was just letting them know who's on, and they're like, well, he's done this with you so many times. I was like, he's done a lot of content with me, but this is the first time that he's actually on the Jazz Takhar podcast, and specifically in studio.
Yes.
With the whole new makeup and setup and all that kind of stuff.
It's fantastic.
So I appreciate that.
No, thanks for having me,
brother.
I'm doing really well, my man. I'm very happy to be here and look forward to a great conversation to put an end to this beautiful 2023 of ours.
Yeah. Did I hear a hint of sarcasm there?
No.
About the market? No, okay. Because
the market is fantastic.
We were all just exactly almost a week ago, tomorrow, we were at the annual Royal LePage Signature Awards luncheon, top realtors in the industry, not just in the office. And you said something from stage that Chris and I were laughing about afterwards. You said something, the most repulsive year in real estate. Do you even remember saying that, bro?
I do. It was very
intent.
It was very intentful. At the time, what I will say is I couldn't be more proud to see a parade. Again, we have a very big office and people who are, getting recognized for their achievements. Some of them were, like, we had our rookie of the year on our team, Mr. Imran Jaxi. Big props to Imran. His best year yet, well into the 6 figures, in what is the worst year on record in real estate history in our entire career. So in the 18 years that we've been around in the industry, this is the worst performing year since my entire career.
Yeah.
We finished first at our brokerage. We did millions of combined gross commission incomes for our team and us. Mm-hmm. Very grateful, very blessed. All is good. But at the end of the day, we had to work 3 or 4 times harder, and I'll substantiate that. Mm-hmm. 3 or 4 times harder to make 30% less revenue year over year.
Yeah.
And last year was not the greatest year of all time. 2021 was the banner year in real estate.
Yeah.
No doubt about it.
Yep.
But 2023 was the worst since 2001. So if anybody in this business got into this business in 2002 and later, which is 80% of agents, this is the worst year on record. When I was sitting on that, when we were on that stage to receive our awards, it's not because I'm ungrateful. It's simply the fact that I wanted to recognize that a young agent coming into the business, having their best year yet, doesn't even know any different.
Well, I think,
and I was so proud to see that, because that, like, you see a young man or a young lady proudly walking to the stage, you know, like they did it. And we're sitting there knowing that revenue is down 30%. 30% is substantial.
Chris,
It's very big.
In your 6 decades with your family, would you agree with what Simeon's talking about when it comes this being like the worst year that you've ever seen as well?
Yes. The caveat to that is the early '90s were worse, actually.
A lot worse.
A lot worse in the sense of, for homeowners, the volatility of prices was greater, so there was bigger losses, bigger adjustments in prices. So from a homeowner standpoint, this correction we're in is not as bad as the correction of the early '90s. From a business standpoint, the business of real estate sales, this is the toughest market in history. Because of the ratio of, because of the low, we haven't seen sales at this level. The year hasn't finished yet, but the Toronto Regional Real Estate Board will end up with a unit sales number similar to what happened in 2000, 2001. So that's, 20
after the tech bubble. That was also a challenging year.
Challenging year as well. So the difference, though, is there's now 65 this is just business, right?
Yep.
This has our investors out there.
And we're going to talk about that.
Yeah. So this is just the business of real estate brokerage. There's 70,000 licensed realtor members of the Toronto Real Estate Board now. Back in 2001, I think it was 17,000.
Because I got licensed in 24.
I think.
In 2004, and I think I came in when there was 35,000. So in
Yeah.
that 3
So
years,
it kind of grew
Yes.
quickly in that time period. I think 17's right. Don't quote me on it, but call it 20.
Sure.
Call it 25.
Sure.
Call it 30. Right? There's 70,000 people now trying to make a living in a market where there are fewer transactions than there was in 2001 when there was, I think it was 17,000, but call it 20, like whatever number you want. So it's an interesting business challenge. And again, we're not, I'm not saying this to, cry the blues or anything. It's just facts. These are just, and every industry, Jazz, goes through this. Like, that when we were busy in 20 and 21, there were thousands of people in Canada that in different industries that were suffering tremendously.
That's right.
Right? You think of the hospitality industry and the cycle they went through. I mean, devastating.
Well, through COVID, 80% of hospitality businesses got regurgitated.
Yeah.
Like, they shut down, went bankrupt, and reopened. Like, right now there's a boom in the hospitality. Well,
Yeah.
winding down again because of the inflation.
Yeah.
But post-COVID, 80% of banners were rotated.
I didn't realize that.
You're
I
talking
mean, I
about
know
like
you've got a
restaurants
massive
and
restaurant
clubs
background.
and stuff like that?
Yeah.
That includes all of hospitality.
Got it.
Yeah. Like hotel, like everything.
But some of them didn't even open up again. Like if you go downtown, like there's still.
I'm not telling you what was lost. I'm telling you what was gone, and like something else took its place. Like if you walk down the street, it still looks sort of the same, except that it's not your favorite Chinese restaurant. It's now Jamaican. That's not your favorite Jamaican restaurant. Now it's a burger shop.
Yeah.
Or 3 iterations thereof in the same amount of time.
So again, I don't say it because we're to cry the blues or anything. It's just, these are just facts. And so, we've been doing it long enough now that we're prepared for it. We went through the 90s. We tweaked our business model to make sure that we could continue to serve our clients really well, that we could support our team of realtors really well. And we learn, like, that's the thing. It's like whenever you have an adverse time, that's when you do your greatest learning, right? My dad always said, you're not going to learn from your wins.
Yeah.
Nope.
Right? You're only really going to learn from your losses. So that's what we're going through now. And if you're prepared for it and you have, the long view, which we'll probably talk about because we talk about that often in real estate, is always taking the long view, then we'll come out the other side. But yes, from a business standpoint, this is the toughest year. So congratulations to you guys for your year. Absolutely incredible. It's built on the foundation of helping people, right? And that's why you continue to be busy, because you do everything you do. And I have the opportunity to watch a lot of, I've seen a lot, I've been around for a few years. The bottom line is when you take care of people, the business kind of takes care of itself. And so a huge credit to you guys.
Well, you've seen our entire career saving except 1 year.
Yeah.
You've seen our entire career because we've spent the whole time together. And when I was saying a second earlier 3 times, and let me substantiate the 3 times harder, the fact that we had to work 3 times harder.
Yeah.
For us to achieve 70% of the number we did in 2022, we had to work 3 times harder. And 3 times harder means that each deal, on average, fell apart at least twice. So I'm not saying maybe I worked 4 more hours a day. I know as a fact that my phone was ringing from 7:30 a.m. when I take his first call of the day. Hi, good morning, partner. What's happening today? To 11 o'clock or midnight, speaking to our clients who are deathly afraid of the future and the commitments or investments they've made, telling them where they sit in the cycle. What does that look like? What options do they have? People were and continue to be nervous. This is why we have listings on the market in a market that has no inventory. The demand we know is there, but people are not buying listings not because they don't want to. It's because they can't.
And we're going to go into that. In fact,
Yeah,
and we will.
let's get into it.
And let's get into it. But when I say we work 3 times harder, and I'm not speaking just for myself, because there is other notable, incredibly talented and hardworking agents out there. But for all the agents who thought it was a free ride, to all the agents who got into real estate while working at McDonald's at the same time, thinking that, if I do one transaction, it's $50,000. It was a very quick and easy lesson to get back to where you belong.
Yeah.
And it's the year of the professional and the year of the dedicated professional at that.
And when you say 3 times harder, I mean, Chris and I speak a lot in Don Mills' office, and I was telling him throughout the year, like, where we would maybe make 100 phone calls that would turn into, call it 6, 7, 8 appointments, which would then turn into 3, 4 deals. We had to make easily 300 phone calls to get that. And to be honest with you, it was probably closer to 450 to 500 this year.
There you go.
Like, the work was a lot harder. We had to put on more events. We had to shoot more content just to get the same awareness that we were getting.
The net had to get
before.
much wider to catch the exact same amount of fish.
So look, before I decided exactly what we were going to talk about today, I knew that I had to up the game, and I decided to do that through having some articles that are like that's what people are watching on TV. That's what they're listening to on the radio. They're reading online as well. And so I thought, why not bring these to our viewers and listeners? 50% of my viewers and listeners are real estate professionals, so the real estate agents and mortgage brokers. So I think we touched on that. They got to get prepared. You got to work harder. I mean, I love what Chris's dad said in terms of when you're winning, you're not going to learn much, because the winning hides a lot of your holes, right? Because you have people calling you in, where now in a year that we went through and we're going through, you have to work harder. They get that. They understand that. The other 50%, it's really more investors than anything else. It's not really a lot of end users or home sellers. We got some of that, but majority of it is investors. So I got some stories and some headlines, and I want to get all of our commentary on it. And then something that we've always done for the last 3-4 years at the end of the year is throw out our predictions for the next year. So you guys make sure you keep that in your back pockets. But we kind of touched on it, but if you guys can go to page 15. Okay, I just want to make sure, page 15, and this article is, I believe, from the Toronto Star, and I know, as I mentioned, you touched on it a little bit Simos, but why don't we dive into it a little bit more? Toronto and GTA real estate on pace for fewest annual sales in over 20 years. This past year has been a tough one for real estate agents. That's more talking about the business. But according to the most recent sales data from the Toronto Real Estate Board, which is TREB for November, which is the largest real estate board in North America. I don't think that's changed. Bigger than New York, bigger than LA, bigger than Chicago, Vancouver as well. It's reported at the end of November, we're sitting at 62,000. Chris, I'm not sure if you mentioned it earlier, but we've been throwing around at the time of this recording, we're sitting in the middle of December. This will come out, I think, on December 20th or something. We're going to probably end up around 65,000.
That's what we're thinking. Between 65 and 66 was our guesstimate. So we'll see how close we get to that.
Okay, and as you guys touch on it, the least amount of sales compared as of 2000 or 2001. Now, as an investor, if someone's looking possibly to make the jump into their first investment property, maybe their 8th or 42nd door, is right now possibly a good time? Thoughts on that? Simos, I'll go to you first.
There is never a bad time to buy real estate. Any time can be great. Right now, it can be phenomenal time to buy real estate. The dynamics of what makes a deal great have changed. So a buyer, an investor right now has to focus on structure, on how the property is going to be leveraged, to what amount and to what rate, what are the terms of the deal. Because right now, I can tell you with absolute certainty that real estate is on sale. In this artificial environment of the sale, just like the artificial environment of the boom during 2021 and 22, these were artificial, meaning the government brought and mandated interest rates to be zero. That's not normal. Nobody gives you money for free. So people took advantage of it to the point where it caused the problem, and now they have to fix it. So both artificial bubble and pop, neither one was based on fundamentals of real estate, because money is typically never free, so you can't go up like this forever. You just can't. You go up like this, you're gonna, let's say your wings are made of wax, the closer you get to the sun, what happens? You end up being an island in Greece. Okay?
You had to get Greece.
I had to. So when you soar this high, this fast, this is just what happens. On the other token, we're in this artificial market now, the other side of the coin. So right now we have artificially high interest rates that are not sustainable. You're going to go not into a recession, into a depression if you continue, which is why they stalled. Now they have stopped raising the rates, with an absolute majority of economists predicting. Our own CEO, Phil Soper, who is the voice of real estate in this country, yesterday his report, this morning the report came out actually, I just read it, that the second half of the year, potentially fall, we might see a couple small quarters going downwards. Nothing massive and fast, but the up in interest rates is down. So when you ask what does that mean to the investor watching right now, is this a good time to buy? Yes, it is. But if you have to leverage all of it the way you did 3 years ago, the math doesn't work. The deal doesn't pencil. So either you have cash on hand or you leverage the seller's cash, meaning a vendor take back, at a rate that can work. And that could be a temporary 1, 2 year, 3 year VTB to give you enough time for the market to make changes if you believe, and again, there is no investment without risk. If you believe that the market will go up, and I do, and we can speak to that after if you, because when you ask me for my prediction, I'll tell you what it is.
Not yet. Go.
Not yet. But I do believe fundamentally that this country has, so I believe the rhetoric that there's a massive housing shortage, I actually know is a fact to be true because I've been part of the scene for 20 years. I have witnessed the tenant pool rise like a tidal wave, pushing and putting pressure on rental prices in the tune of 50% in 2 years, 50 to 60% to 70% in some pockets, which has created a different unaffordability crisis. But the minute we see this environment clean up, that tenant pool is going to start coming down, buyer pool will start swelling again, and we're going to see people making their moves. At that point, prices are going to start shifting again up because there's a tremendous lack of inventory. And I'm saying tremendous, not maybe a little bit. There's a massive shortage of homes, specifically in the big urban markets across our country. And I'm speaking to Vancouver and Toronto. Calgary, Edmonton, Montreal, they're seeing big changes and good things, but they don't have the housing issue that Vancouver and Toronto have.
So it's safe to say that you're bullish on the market. Like I just
Tell us how you really feel.
So I'm telling you that I believe in the long-term fundamentals of the GTA market more than anything else.
Chris.
I would agree as a whole. I think that, to your point, you have to acknowledge that rates are a major factor on people's real estate decisions. We've proven it time and time again. This year, in the spring, we had a rate drop of about 75 basis points, so not even 1%, just 3/4, right? It dropped from just over 5% in February-ish. By April, you could borrow 5-year money in the 4.5% to 4.7% range. In the GTA, average sale price in 90 days went up approximately $150,000 in 90 days. So when you ask the question, is now a good time to buy? To your point, it has to work, obviously, for whatever your scenario is. But what that reinforced, that scenario that happened this spring, reinforced if you wait for rates to drop, prices generally go up,
Quickly.
right? And in the spring, because of, to your comments, we know the demand is there. So that's why I agree that now is a good time to buy if you've got the right capital and structure of the deal. Now is a good time because rates haven't dropped yet, but they are dropping. Just this week, we know now that the U.S. Announced that they're going to hold, that they just held rates, and they're talking about the potential for 3 rate decreases in 2024. Again, it's potential. A lot of things have to happen, but that's directionally where things going. The bond rate dropped significantly from its peak in September already to today. And so that would show that, and the bond rate is how mortgage rates are priced. So that means the mortgage rates have dropped already. If they continue in the direction they've been going, they're going to be coming lower, which brings more people back to the market, which makes housing more expensive. So now is a good time if you believe that rates are going to continue to either stay at this level or go lower. If you believe that the country's population is going to continue to grow, which I think we have to believe that, but if you don't, that's okay too. You have to. These are the factors you want to keep your eye on. And if you understand the actual supply demand challenge that we're facing as well. And so those are the factors I think you want to look at, Jazz. And if the way I look at it right now, it looks to me like it's a great opportunity to get into the market.
So, and to kind of wrap up what you guys were saying, and then we'll move on to one of the other articles. I've always looked at relationships, the business that I'm in terms of helping people buy, sell, and invest with a coaching company that we have for real estate professionals, content production, and then investments, because I'm not as smart as you two when it comes to really looking into the data. But what I figured out is if I just look at this from a 10-year window,
Yes.
all those things that I mentioned, there's going to be some ups, there's going to be some downs, but you look at the last 10-year chunks for a 100-year sample size, the values have always gone up probably close to double, which always sounds weird because 10 years ago when somebody told me that the average price is going to be 1.1 million, I kind of thought they were a little weird as well.
No, but even if you look right now, Jazz, today, now with the market down since its peak, but if you look at 10 years ago, so if we were to pull up right now, December 2013, and you looked at what the price was and what the price is today, maybe in post-production,
we can easily do
the
that.
team here can put it up. You're going to see that you're extremely close to exactly that comparison.
Mickey, can you jump in and just maybe take a quick look? Just Google it, and then you can pipe in after. Just Google what was
average
price in GTA in 2013. you're probably going to be flirting around 550, 560. But
You're-
see how it went up though, right?
Correct.
You had that huge jump to 1.3, I think it was.
The only thing
maybe
I
at some
don't
point.
want to do though, so this is the thing. So we are in the business, we are biased because we are heavily vested in real estate. All of us, your family is very, very much vested in real estate. They've built it, they've sold it, all the things. So we are, to anybody who's listening to us, are we biased to real estate? The answer is obviously yes.
Of course.
Are we in the business of profiting from somebody transacting in real estate? The answer is yes.
But we're also in the business of profiting ourselves.
100%. So again, the reason I'm saying these things is because I want to put an emphasis on something. We have been profiting off transactions in real estate our entire career. That's our career path. We are investors first, and the reason we've been around for 18 years and still able to sit at the top of the table and be able to open our mouths and share our opinion and somebody to actually want to listen is because we care about the relationship with our clients. We have built our clients hundreds of thousands to many millions of dollars in happy returns. And in a market like this, we still, I'm not gonna say we're averaging, we are still 100% close rate because we qualify the people we sell real estate to. We are responsible with our work and we take our job very seriously, which is the same reason I don't want anybody to get confused with a biased real estate agent message. Is this a good time to buy? And I say yes. I want to be super clear.
Yeah, I'm glad
that
you are.
yes,
Yep.
it is a great time to buy the right way.
Yeah,
not the
and
speculative
for
way.
you, right? For everybody, every individual has to assess their own situation, right? I think that's super important. And when I always talk real estate, because we are all three of us are on the same page, we're just to be very clear, it's always for the long term.
Yeah.
We're talking investing to my belief means long term hold, not buy flip, buy for a short term and move it out and make a quick buck. That's speculating.
Yes.
When I talk about investing, it's what, to your point, what is it going to happen in 10 years? And I know you asked
No, but
Nikki
can
to
you
pull
carry
this
through-
up,
can
but
you carry through the
I
trip?
pulled
You
up
got it
the
up?
number.
What do you got there?
So in November of 2013, the average sale price for the Toronto Real Estate Board, I'm glad we're all sitting down, or I'll wish we bought a few more things back then, $538,881.
And today's 1.1 ish.
Just shy, 1,080,000.
So is it
Call it.
literally double?
It's double.
It's exactly double.
Almost.
Almost
Call it right there.
exactly.
Right
Almost
there.
exactly
Almost to
double.
the penny.
And
It's exactly
after,
double.
after it went to a place, peak February 2022.
1,330,000.
What I was going to say 1.3.
Yeah.
And
Right.
this
So
is
you got to
not-
ride that. You got to just understand that you're going to have these ups and downs. And I like what you said, Chris, because I know this in your portfolio.
So
that
go to
you don't buy
2003
the
now.
you don't
Go to
buy homes.
2003.
You're not buying
Great
homes.
minds think alike. That's where I was heading.
Yeah. You're not buying real estate, doing some renovations to it, Chris, and then flipping it. That's not in your
That's a
portfolio.
business. That's
well,
not
what I'm
investing.
saying, right?
Yeah,
Like,
that's a business. That's not investing.
so
Yeah,
when
that's
people-
either a business or speculation.
and when people
Yes.
call us, and when I'm speaking to people at cocktail parties, and they're like, I'm gonna buy and flip, and I'm like, dude, like, do what gets your juices flowing. But that's not what we talk about. What we talk about is the boring, but yet most accurate way to win and create wealth in real estate, which is, again, like I'll emphasize that word again, it's boring. It's not the get rich quick scheme. Unfortunately, even though some of my social media target market kind of skews to that 25 to 37, 40,
Yep.
where they want that quick dopamine hit because we like the likes, we like the comments and all that kind of stuff. Real estate's not for that.
No.
You're not going to get that in real
It's
estate.
the exact opposite.
Right? It's that buying, like, I mean, Chris, you don't even, and you've shared this on content, so I know I'm not saying anything that, I'm stepping outside my boundaries. You and your family don't buy and refinance the properties.
No.
Like, you buy them, you hold them,
Buy hold.
you let the rent just cover the expenses, and at some time the mortgage gets, paid down enough where you just have cash flow.
That's the idea, right? Because that's what you want to what our philosophy is you want to create a recurring income for yourself so you can retire someday. You can still go to work on your own, but make it your own decision that you're going to work, right? Knowing that you have that income coming in every month and you don't have to worry about the stock market and this and that, because residential rental property in our region, we're very lucky, has been, the income is pretty consistent, right? And so absolutely, so we don't like it. It's fun to, like, I was just looking back at these prices now, it's fun to talk about, right? Because it's like equity growth, this is super exciting. But really, from an investment standpoint, it's the cash flow at the end of the day that is super exciting. Sure, it's fun to say, yeah, if we had bought more in 2003, we'd be even happier, because the average sale price in November of 2000,
275. Just let me throw a number.
Yeah, you're almost right on the button there. It was actually a little more, 301,000.
I would rather be the less.
Yeah,
anyways,
so 300,000 in 03.
553 roughly in 13. And $1,080,000 in 23.
So I bet you again, if we
Double,
were to go back to 93 and 83, etc., we're going to see the exact same story.
Yeah.
And whether it's up, down, sideways, the whole point of the exercise, and this isn't a told you so scenario.
No, these are just facts.
This is facts of how a civilization that is not at war or has,
We're lucky.
a tidal wave or an earthquake, a society at peace progressing through time.
Yeah.
Is all this is.
Well, you look at this room, right? The people that are watching right now, they can't see the team behind the cameras, but it's the friggin' United Nations.
Of course.
Like look at where everyone's from. This is where people want, like when I say here, I actually am very biased to the Greater Toronto area, because we know that 50% of people that come into our country, they want to come to the GTA. Now, if something happens, like maybe what happened, and maybe you can touch on it a little bit more, Chris, like I think it was maybe late 70s or so, maybe mid 70s, where the major banks left Montreal to come here to Toronto. Like if that starts to happen, there's something that we need to maybe think about.
No, but Canada's story, you can actually tell the global story, because if you were to look at the United Nations, like you called it, when did the Indians come to Canada? When did the Greeks come to Canada? When did the British come to Canada? You can actually tell the story of civilization through immigration patterns, and you can see that growth the exact same way.
Yes.
And I'm talking from the depths of colonization, where the English and the French first came and did what they did, and then this wave came, and then the Irish famine, and then you can literally tell time through immigration to specifically North America.
Yes.
And the growth of North America, which is continuing to grow. Right now, the U.S., yesterday, another article, is blazing and leading the G7 in growth. And everybody doesn't know why, because everybody was counting the U.S. down and out. They didn't see what happened in China coming. But like there was a lot of things that are kind of upsetting the apple cart. And I'm not taking this conversation to global politics or anything of that nature. But when you say it's the United Nations in here, it is the United Nations in here. And this is the story of real estate here as well.
Exactly. And that's where, I come back to our points we touched on there. Like, what are factors that drive real estate values, right? And cost of ownership, demand, and supply, I think, are probably the top three. Then as you come in to take other factors in, like if there's global factors that are going to affect immigration levels.
Employment's going
to be in there. Yeah, your ability to pay your mortgages. Yeah, obviously at the top 3 or 4 as well. But so these are the things that I think everybody as an investor, as anybody who's interested in real estate, just buying a new home, to your point, is now the right time to buy? Well, these are the things you want to think about, to decide whether you think it's the right time for you. And again, I come back to it. If you believe that rates are going to stay where they are or be lower in the future, or if you believe they're going to be higher, well, maybe you do sit on the sidelines and wait, right? These are the things that these are the conclusions you have to come to. The key is making sure that you are educating yourself appropriately with facts, which is hard to decipher these days with with social media and all these different
headlines,
right? You have to be a little careful, right, at the headlines.
It's the interpretation that matters to this
you've
point.
got to dig in, right? You've got to look into the numbers and really figure it out. And if you and then come to your conclusion on what you believe in, then you'll be able to make a great decision.
And I think what Simo said earlier, and he was quite animated, but I wanted to just add a little bit more clarification, because it's my partner, and I know what he's thinking half the time. When he mentioned that real estate is on sale, that's not necessarily right across the board in the country, let alone in the Greater Toronto area. I think, I probably should just do the research on it, but I think it's safe to say that there's probably there's probably over 300 micro markets in the Greater Toronto area. It's probably even a little bit more than that, right, guys? I mean, the Harbourfront condo market is completely different than the Distillery market, which is different than the Bay and College condo market, and then let alone Don Mills compared to Brampton and Mississauga. In certain areas, there is real estate that's on sale. Right?
Absolutely.
And we were probably saying this back in late 2020 when a lot of people didn't want to touch the elevators in condos, rightfully so.
When you could shoot a cannon through Yonge Street.
You could shoot a cannon through Yonge Street.
That was frightening.
September, October, everyone's selling. They're okay to move to the burbs. And condos went on sale. Like, I mean, nobody wanted to touch these things. And you look at what happened from probably November 2020 to like today in the condo market, that also has gone up in terms of value, right?
Yeah, because we track months of inventory.
It's my favorite one.
Right? It's the favorite run because that's
it's the only one that matters.
Yeah, exactly, right? So we look at months of inventory because that tells you what your supply and demand looks like. And so we know historically that if you have 3 months or less of supply, which means that if based on the number of transactions that are happening, we didn't list any more properties, you'd run out of properties in 3 months or less. It's a seller's market. Gets 3 to 4 to 5 range, it kind of balances out. Above 4, definitely above 5, it goes into buyer territory because that means there's just more choice, right? There's higher number of months of inventory, the more options you have out there. So supply and demand changes. And there are pockets in the GTA right now that have 7 months of standing inventory.
Have you seen that before, Chris?
Oh, absolutely.
Okay.
We have, for sure. We've seen it worse in the 90s.
So I'm right to say when I got licensed in 2004, I've never seen
I don't think you've seen 7. You probably
I haven't seen
when
5
you
and a
came
half.
in,
I don't think. Chris.
I think you were in that range.
Maybe. Okay.
Yep,
Okay.
possibly.
Maybe it was back then. Okay.
That time. But so there's those pockets, but then there's other pockets right now in today's market that there are 2 months of standing inventory. So you have to, it depends, right? Where should we buy? Well, it depends on what you're looking for. And where value's heading. Well, it depends on the micro market that you're talking about. Depends on the neighborhood. Depends on the product type. But that's where you want to find your opportunity. And I've said this to a lot of people, like, oh my gosh, my real estate prices, my neighbor got X 6 months ago, or in February they won the lottery. Their timing was right. But your real estate hasn't gone bad.
Yeah.
The cost of borrowing has changed. That's all that's happened here. You
Correct.
own great real estate. Don't worry about it. It's just that if that's the number, if you want your neighbor's number that they got in February of 22, sit tight. It will come back as the economy changes, as rates change, as wage inflation happens naturally. Those prices will return. Your real estate hasn't gone bad. It's just the factors that affect the value in the short term have changed since that moment in time.
And I think most people are comparing it to the peak, which was February 2022.
Yeah.
That was probably the highest it's gone up.
Yeah,
not only is it going to come back, we actually know that it's going to go higher. Because if you just wait the 10 years, it's going to double from what it is today, which is going to be higher than what they were selling for in February. But I think it's a matter of those sellers willing to wait it out.
Well, that's it. And it depends. Depends on your timing.
Or are they able?
Yes.
So the biggest crunch right now, it's not the people who are not willing to wait. It's the people who can afford to. And those are the people that were more than likely, because out of the, let's call it between 700 and 1,000 people that we touch a year with us and our team. It's a pretty damn good sample size. It's actually the average sample size of any study done on a national basis.
Yes, it is. Yep.
So we're very fortunate to have our own pool of data that we know exactly what the pulse is at any time. The true, real bad problem lies in less than 1% of people in deals. The ones on the fringe, the ones,
always.
the ones that are right now losing sleep, they can't breathe because they bought that February of 2022. Yeah. They bought that January. So How many transactions were done in January and February
Of this year?
of 2022? Was it 5,000, 10,000, and 10,000, 20,000 people?
Yeah.
So out
At
of,
the
out of
very
20,000
most.
people, half of them were buyers, half of them were sellers.
Yep.
Yes?
Yep.
So we're talking about 10,000 people across 8 million in the GTA.
Yeah.
So let me repeat this. The people who are reeling in pain, and I feel for you, it absolutely sucks. But somebody is always the one caught. Nobody knows when that wave is going to crest. Nobody does. Not your agent, not the Pope, nobody does. There was indications, there was many kind of red flags at the time, like, can this continue, because every month was a new record. So the only people who are reeling right now are those 2-3 months of transactions between December and February, December 2021 to February 2022, which is half. Half of them got their lottery tickets cashed in. The other half is in pain right now.
I don't even think it's that high though, right, Simos?
But
because
even if it
you know
is-
what? Because they locked in interest rates pretty low
Listen,
back then.
And again, so out of
It's
the
really-
10,000,
yeah.
now out of the 10,000, we know that half of them are more than likely mortgage free, because that's half the population. Even 30%. That leaves 7,000. Out of the 7,000, half of them did a 5-year fix. That leaves us 3,000. So when people are watching all this drama on social media, on news, it's not that people aren't hurting, but it's not as bad as you
Yeah.
think.
I agree.
So I'm not downplaying anybody's pain in any way,
No
shape,
way.
or form.
No way.
Because
It's
somebody's
real.
hurting right now.
It's real. Yeah.
It's real. And we actually dealt with something this morning. Very real.
Yes.
And when was that purchase made?
Yeah.
February 19th, 2022. An agreement of purchase and sale that came to me today that, for example, this client sold a family member a home in an outside market, February 19th, 2022. It's in my inbox. I can redact it and share it for $930,000. Right now, the same builder has sold 3 homes in the specific subdivision for $780,000.
So their appraisal's coming in a lot less.
Well, the appraisal is coming into whatever the builder is selling right now.
Yeah.
So the builder is cannibalizing his own clients. Do you understand what I'm saying here?
Yeah, I completely understand.
So now this $200,000 difference has to be done in cash and or in court. Who's going to sue who? Up, down, sideways. The whole point is these people can't sleep at night. The builder is also suffering. We can easily blame and say, "Oh, guilty. The builder is greedy." No, he had a project. He tried to profit. He sold at market. Now he's in a different market. Nobody's asking the builder who's making his interest payments on millions of dollars.
Well, on the flip side, when people were purchasing them at 700,000, and then when they went to go
But
close
there are
on it at
many ways to lose.
900,
All I'm getting at
nobody
is
felt sorry for the builder at that time.
nobody feels sorry for anyone.
Yeah.
The whole point is there's many ways to lose from a builder and developer, from the consumer, from the brokers. Who's blaming who now? Do you think the buyer is blaming anyone but the agent? What did the agent do wrong? Nothing. The buyer said, "I like this home. I think it's a beautiful home. How much is it? Well, we're in the hottest market. It's $920. Go ahead." What are they going to say? That in 2 years we're going to see 14 interest rate hikes? Whose fault is it? It's nobody's fault. You're a victim of the market and circumstance. Were you overzealous as a buyer? Were you a little under due diligence as an agent? I don't know. But there are losses,
Yep.
real ones.
But I think that happens majority of the time, to what we were saying earlier. If you're speculating and you're looking for a short-term win, that's when, what does Warren Buffett say, right? When the tide comes in, we're going to see who is swimming naked, right? And so that's what we're starting to see, that if you're watching and listening right now thinking, oh, should I get in the market? Should I not get in the market? Please just understand, only get into the market if you can if you have the ability to hold on for a decade.
Yeah.
Right? At least a 7-year period. Otherwise, you might be running into problems like this, Chris.
Yeah. You only lose money in real estate if you have to sell.
Sorry.
Which means, because to your point, there are some people that can't hold on, which means you have to sell and you have to take whatever's happening in that moment. But if you have the ability to hold, at least we just did a 20-year history, right? Quickly here. We can go back 30, we can go back 40. We know what the math is. If you have the ability to hold, you're not going to lose. So you only lose if you can't hold. And it's a fact that the interest rates moved faster than any other time in the history of rate setting in Canada. They started setting rates in 1935 here. And the rates have not moved faster and at the greatest relative, percentage growth than any other time in history. And at the time, if you remember, if you rolled back the tape to the fall of the fall of 21, the Bank of Canada, I believe, was saying that rates will move in 24. And now we know, or 23 or 24, I think they said back then.
I thought they said, I think it was going to be for 4 years. So I think they were going to take it till almost end of 24 to early 25. They weren't going to touch rates.
That's right.
Yeah.
And then unfortunately, the inflation took off and they had to change their decision-making, their strategy. And so effective March of 2022, they said, it's hotter than we thought.
By a lot.
And off they went in their new strategy. And they had to make difficult decisions.
Where do you guys want to go to next? What article kind of have you guys read that?
It was 4 times hotter. Inflation is supposed to be at 2 to 2.5, and we were hitting 8% on paper, with people saying reality was between 8 and 11.
Let's actually go to page 10, guys. This is where I want to take you guys right now. It's our good friends at the Green Bank. I tend not to say their name until they start sponsoring us. Any of the 5 majors. Canada's second largest bank says average home prices could drop as much as 10% by early 2024, thanks to the surge in housing supply in 2 provinces.
What is the date of this article?
This article would have been this week. This came out.
And let's just say that's the headline.
Yes. Home prices could drop by 10% and great point, Chris. Home prices could drop by 10% in early 2024. I will say the name because it's TD. And I love what you said, Chris, because this is put in the way that it's written for people to click and pick up that newspaper, because if it bleeds, it leads. If the front of the newspaper said it's going to be a beautiful sunny day, nobody tends to pick up that newspaper. But if they say there's a storm coming, most people pick it up. They gotta make sure that they protect their homes and their families. This is what I believe happens in the media, but let's dive into it. A previous forecast from TD Bank had called for average home prices to fall around 5% from the third quarter level through the early part of next year. However, the bank updated its forecast this week to reflect a much steeper drop, citing an upgraded bond yield forecast in a greater loosening in the BC and Ontario real estate markets than it had previously predicted. Ontario sale, so I just want to make sure that there's nothing missing here that I think we should bring up. Okay, thoughts, guys. 10%. So we're looking at, in the Greater Toronto Area, the average, let's just use 1.1 million. They're saying approximately $110,000 drop in home values. Now, this will scare a lot of people. What's your guys' thoughts on it? Chris, I'll go to you first, buddy.
Well, I just wanted to, let's go deeper into the article where a lot of people, when you're skimming, I do the same thing. I read the newspaper every day. I still get a traditional newspaper at home. I still love it.
Not lying.
I'm old-fashioned.
He literally has.
But the key is
newspaper that you read, which I love.
A little trick is you should actually read the last 3 paragraphs first.
Okay.
Of the article, right? Because we don't often get there. So I jumped.
That's all their liability right there.
Right? So
go read it.
So
Chris.
It says TD predicts the Bank of Canada will cut interest rates during the second quarter of next year, preventing home prices from dropping further, and that population growth will sustain demand. Now, that's not the headline.
Right.
The headline is prices could drop by 10% in early 24. But if you read at the last paragraph of the article here, the third last paragraph, it effectively says the opposite of what the headline says. The potential for weaker growth or higher than expected interest rates are important downside risks. Like, you have to look at them,
Yep.
They're saying, right? You've got to look at that. However, they just said here, they're predicting that the Bank of Canada is going to cut rates.
Oh, and there's another quote here. Actual quote from this article. Some perspective is warranted, though. the latest forecast warns, a 10% decline in average home prices would still leave them 15% higher than pre-pandemic levels.
Right? So,
Hey, for all those who are losing, you're actually still 15% up.
yeah.
So don't worry about it.
But you have to go all the way to the very end of the article to hear more detail, and the detail that I think is important to put the headline into context.
Right.
Right, because they're not wrong by sure. Could prices drop? Absolutely, but
They could
what
drop by
scenario?
50%.
They could.
Right.
What scenario would have to happen for that piece of their prediction to come true? Well, we'd have to see higher interest rates than what we have today. Likely, immigration would have to slow down, so demand would have to slow down. So again, as from the start of our conversation today, I said these are the facts that you need to understand, and you need to come to a conclusion as an investor, as a homeowner, as somebody interested in real estate. What do you believe, right? Do you believe rates are going to be higher next year or lower? Do some research, figure it out. TD says they believe they're going to cut rates next year. TD's pretty smart operators. Oh, I keep saying the brand. I'm sorry.
No. Now I went into it.
I apologize.
It's okay.
They believe that demand is going to be higher due to sustained growth in population. Okay, do you believe that? Do you think that's a fair statement? The government of Canada has stated that they have goals that are higher in 24 for immigration levels than they were in 23. So do you believe they can execute on those goals? That's something you have to think about. Is that a factor? Because there's your demand, right, to help promote. So these are the things that you want to draw conclusions on. But to your point, Jazz, I love that you read the headline, because that's really what, is what a lot of people are reading. Headlines only. And until you dig into the weeds, so to speak, it's hard to really, you can make a misjudgment by accident.
Yep.
By scanning the headlines and not getting into some of the detail, behind that.
And when you speak about the interest rates, which I strongly believe we're going to start to see some cuts, and you kind of skimmed over it earlier when we got started, but when interest rates drop, that cost of borrowing decreases. That's when consumer confidence, which you can't really touch or smell, it's more of just this momentum that people are starting to buy more. They're making larger purchases, investing into real estate, purchasing homes, buying cars, maybe some boats and all that, going on more vacations. Once interest rates start to decrease, the conversations at home change to, honey, maybe now we can go look for that bigger home. Or, honey, maybe we don't need to rent now because what we're paying for rent is very similar to what we can own a home for. And what happens is you have more people looking now, hence that months of inventory, the supply starts to go down, and values shoot through the roof. And so that leads into, what are your guys' predictions? I'm going to go to you first, Simeon. Where do you think the market's going to end up? Fast forward to December 15th of this recording, or 14th, 2024. What do you think we're going to be sitting here and saying that happened?
I truly believe that this wave is going to crest in January, meaning the downward pressure on prices. With December now, the December 6th decision to not put interest rates higher, the bond yields changing, because this has helped us all get a really deeper understanding of how the economy works. I didn't know how close they were tied through the better half of my career. Only the last maybe 5 to 10 years I've really focused on economy, and now knowing those indicators, the real estate market is about 30 to 90 days behind any decision. It's not, so if something happens today, it's not like a stock where tomorrow morning it rallies.
Yes.
There is no rallying. People have to move. People have to do things to see a change. So I do believe November's pain, December's pain is going to manifest and finish in January. So I think that's where the crest, like the February of 2022 boom, this is the January 2024 bust, ends here. And I think we're going to see a slow and steady pickup of activity. I have seen at least a half a dozen emails in my inbox the last week with both more buyer activity, commercial activity, office space, business, retail for lease. I'm seeing an actual uptick in activity.
Which is always a
And
an
when we
early
have
signal.
and when we have the broker of record, the broker and owner of an agency with 1,500 agents, we can just go to the front desk and ask. Our calls up, yes or no, and instantly we understand the beat of the market. So that's what we are seeing right now. So we're seeing some positivity, which means I know what's coming down the pipe. If and when in the spring or summer, fall. So I think somewhere between May and October is when we're going to see the action, the first tick down. If that actualizes, we're going to end up I'm going to say...
Give me a price increase.
I'm going to say 5% to 7% at the absolute most. And not... Just because I saw the Royal LePage report this morning that was published, it's actually dead on in that range. So
5 to 7%.
I cheated.
Yep.
I read that report.
That's fine.
But I was there yesterday.
Yep.
And I definitely agree with everything that report, its contents.
Well, the good thing is that it's all a
off.
prediction. Even theirs is as well. But
Yes, but
obviously with a lot of data. But
So 5 to 7%, and I'm talking about the GTA.
Yeah.
Excuse me.
Yep.
The GTA, I see 5 to 7% up this time next year.
which is interesting because to the edge of the 7%, I think that's probably the average for the last 40 years in the GT. I think it's 6.2 or
Yeah,
something.
but the last
Chris, you always
10 were
quote-
much higher.
Oh, for sure.
So it was ridiculous.
That would be an outlier almost, right? The
But
last
I'm
decade.
going 5 to 7 tops.
5 to 7. Christopher, yourself.
In a nutshell, I would agree.
Okay.
I'm generally more conservative as a just my personality, I think, or the way I view things. So I hope there is no more than 7. That is for sure, because that starts to get to the hotter
Back
end.
to the nonsense.
And we don't need nonsense. The volatility is what we're trying to avoid. So maybe it's because I hope it's not too hot that I believe that the 5 range is probably a comfortable number. I don't think we're totally out of the woods yet, and that's why I don't want to get too excited about it. But I do feel I'm in agreement with Simeon on the fact that I think we're at the moment where we are at the low. We've looked back over decades of data to different moments in time where there has been significant market changes. And it takes about 18 months on average for the market to start to come back from a transaction volume standpoint, which has to happen first before you generally happen first before you see price increases. And so I look at July of 22, even though the peak for prices was February of 22, for me, July of 22 was the real turning point, because if you remember back then, Jazz, the Bank of Canada said they had already made a few rate increases, and then July of 22, they made a 100 basis point, a 1% jump.
Yep.
And our market...
Whap! That was one of the few times
Right?
that it did happen quite quickly.
Hey, no.
It almost acted like a
Overnight?
stock. Almost.
Yes.
Wow. Right? It almost
Yes.
acted like a stock.
Which is
at that
rare.
time. Which
right?
is rare.
Which is rare, to your point. And
It was
that-
a knee-jerking,
Yeah.
market freezing.
You got it. So this coming January, is 18 months.
Yep.
Right? So we're now at the point that people, for whatever the reasons, whether it's they can't hold on any longer, they're going to have to make a decision to sell, or buyers are just like, we've been waiting and waiting and waiting. We've been assessing. The Bank of Canada is now comfortable with where things are. They're talking about lower rates in the future. For those folks that are aware what lower rates do, because you talked about, you think of lower rates, what it does is it actually immediately increases your purchasing power, right? So your budget doesn't have to change. And we've talked about this together previously, is we did a chart on purchasing power, right? So I have my same budget. My budget is $4,000 a month. Jazz, what can I buy?
Yep.
Well, when rates are at 5.5%, you can buy this much, because this is the size of the mortgage you can get with your $4,000 budget. But when rates go to 4.5%,
Yep.
now your budget goes up. And, God forbid they go to 3.5%, which is not what I'm predicting, because I don't believe they're going to go back to that level anytime soon. If they did, that means we were in a even tougher economic environment for that to happen. Then your purchasing power goes up. But every time that rate, drops, your purchasing power goes up. So your budget, so you can afford to pay a bit more, and that's what causes
the increase in the prices.
Right? Yep. So, and comfort level.
So would you say, is it you're floating around the 6-ish range?
Yeah, 6%,
okay,
somewhere in there. I think I'd be comfortable with. I hope it's no more than that.
I agree.
And if it's a little bit less, folks, like I would not be upset with that either.
100%.
Because let's allow everybody to kind of get into the market, breathe, not be panicked that they're going to miss an opportunity. Prices, let's hope they don't jump $150,000 in 90 days like it did this past spring. But on the other hand, if you look at all the other factors, like the growth in our country and the fact that we've had abnormally low transaction volume for a market our size, which you could argue there's going to be some pent-up demand in that, right? Sure, we had an abnormally high level of transactions in 2021, but now 2022 was not a record year by any stretch, and 2023 we now is going to be the lowest year of transactions in an environment where population is going only one direction.
So I think it's worth mentioning a couple of things on this, because you just talked about pent-up demand and very low transaction count. So this market right now, when we're seeing less than 70,000 transactions amongst the population so dense, it's not just the buyers who can act. And we talked about the people who are in the market might be the ones that have to sell right now. What all the people who want to sell, but they're holding on right now because right before the prices started coming down in May of this very year, between April and June, there was a liftoff, if you guys remember it.
Oh, yeah.
Prices were going up during a downturn. And that was a very simple reason. There was a stall in the interest rate hikes. People believed for a second it was over. They're like, is it over?
Yeah, yeah.
And they wanted to go buy something. And there was multiple offers because there was nothing for sale. The reason people can't sell or don't want to sell is because they have to buy. So if I have a home, which I do, that is worth X amount of dollars, and I have a mortgage that's locked in. Yeah, okay. And it's worth X amount of dollars. Let's just say I have a mortgage of $500,000. And I have it locked in December of 2021 by absolute luck, not because of insight or any foresight whatsoever. I locked it for 5 years at 2.1%. Okay?
Yeah. Where are you going? Nowhere.
I am not going anywhere.
You got it.
So you can count that if people are in a 5-year cycle, 20% of the population that has mortgages refinanced each year. Just like it's the reverse countdown now. People are like, please stop time. Please stop time. You can't stop time. My terms were up between December and January of 2021 and 2022. I did 3 mortgages. All locked in at 1.9, 2.03, and 2.1. Why in the world would I ever sell right now if I have to buy and get a mortgage at 6? So for anybody wondering what happened, the market's not as bad as people think. There is reasons for this artificial slam down. How can I walk into a client's living room who wants to sell and tell them to sell? No, you need to hang tight for another year and a half. I'll sell your home, but wait 18 months. Take advantage of the $80,000 you'll save in interest. Because even if you buy a house for lower right now, the interest rate differential, you're paying $130,000 more. That is in good conscience as a true professional, my advice to a client. I'm not going to go for the transaction. I'm going to tell them what's best for the client. That is what's happening. That is what the top professionals in this business are going to the listing appointment and unfortunately leaving saying, I had to tell Chris too, hang in there. I'll be back in 6 to 8 months. I'll be back in a year. to our own detriment from a business perspective, but to our own benefit from a long-term relationship and wealth building for our client who can now do 3 more
In time.
in time. So that's. I just thought that whole low transaction. There's many reasons for
is.
it. It's not as simple as people. Oh no, it's down the interest rate. No,
there's a lot of factors.
I can't sell in any way, shape, or form right now. I'd be completely opposite.
Yeah.
So
When they do the transaction count, they're not counting the new builds that actually get sold.
No,
in
that's
town,
just
right? So-
resale. The numbers that we're talking are just resale.
Just resale.
Yeah.
those numbers are tracked elsewhere, though.
Right. Which you'll obviously see a decrease in that because builders didn't obviously come
Oh no,
up
there's
with,
a decrease there.
as much inventory. I'm going to put up my prediction. I think the first part of the year is going to be somewhere around that 1.5% increase. I actually think the later part of the year, like July, August,
And on.
and
That's where we'll
right
see
till
it.
the end of
Yeah,
December.
that's where we'll
I
see
think
it.
it's going to be north of 7%.
You do,
because
yeah.
it's going to be pent out, which brings you that average. I'm thinking about 3.7 to 4%, a little less than what you guys are saying.
Overall for the year.
Overall for the year. So the first part will be about that
Flat.
1.5, kind of flat, if you want to call it. The later part of the year is where it's going to really pick up, but it gives us that full year average of about 3.7.
Well, I think we're all saying the same
3.8.
thing.
Roughly, yeah.
Yeah.
To Chris's point earlier, the reason I think he mentioned, and I know I feel it all the time in the business, that we didn't like that 21% increase in the year of, what was it, end of 2021, the whole year of 2021. Some would say, well, you real estate agents would love that, but when we're working with buyers, we were going into multiple offers on a property with 67 offers, and only one person won. So 66 people went home that night disappointed, hurt that they didn't get the home.
minus $300 in their pockets.
Well, because they did the home inspection is probably more than that. The home inspection, the gas, the food, and all that, a lot more than the $300 that they
There you
probably
go.
lost on that night. However, when you see something go up that quickly at 21% year over year, you know it's going to come down. To the friends, I mean, you're obviously from Alberta, Red Deer specifically. I've always said it's very cyclical, and that's why I like the GTA, because it's that slow and steady that has always helped us here in the GTA. And so for people who think, oh, you guys want to see it go past 10, 12%.
No, we don't.
The business is not fun
No, we
for
don't.
us when you have
not
that many,
sustainable.
and it's not sustainable.
We want a regular market where we can put our own experience and savvy to be the value prop. That's how we win from a transactional real estate perspective, not with the jerks, the ups and downs. When people think we're winning, it's not winning.
No.
Yeah.
No,
We
it's not.
win during slow, steady, stable markets where we can flex with our marketing expertise. We're marketers. That's what we do well. So when things are nice and quiet, it's easy to stand out when you have something unique, meaning you can make noise, you can sing better, you can dance better. That's how you stick out. When you stick out for the negative attention of a market going like this, it's not fun for everyone.
I want to leave my guys with one thing from each of us. Because my viewers and listeners do sway in that 25 to 37, 38 year kind of range. When homes are priced at where they're priced at now, they're going to go up a little, they're going to go down a little. We spoke about that. What are some one tactic or two tactics for a younger person to get into the market for the first time when getting a down payment of $100,000, maybe it's $80,000 on an average condo of, call it $600,000. You don't need to have 20% down as a first-time home buyer. I know a lot of people think you need to always have 20% down. That's for an investor. They still need to come up with about $80,000, $90,000, okay, on that $600,000 purchase. It's a safe thing. You could do it with 5% down. We always recommend try to get to that 10%. What are some of ways that people in that age group can get into the market, Chris?
In terms of
Just getting into the market for the first time. Like if we look at our friends here behind the camera.
Like how to save
1,
money?
2, 3, everyone is renting.
Like you're asking how to save money?
It's not really the save the money. What are some maybe tactics? So let me maybe start to jog your guys' kind of thought process. I think one of the best ways to get into the market from an age group of guys who are renting right now is house hacking, for example.
For sure.
Okay. So stomach the least amount of home that you possibly can. You got to deal with this insecurity, internal thing that you might be going through, that because my buddy Chris Slightham bought
just get off of Instagram. How about you just get off of Instagram?
A beautiful
that's a perfect tactic.
That's a perfect.
Right there.
Well, start there. A beautiful 1,500 square foot condo that now I need to buy that. Stomach the least amount of home possible, meaning live in the basement. Live in the basement, rent out the upstairs. It's what my parents did in 1973 when they came to Canada. Taxi driver, my father his whole life, factory worker, my mother. They could not put a down payment together, but they started there. That's how they got started. So that's one way. What is maybe another way that they can get into the market?
Well, I'm going to just say, like, straight up, it's the expectation first and foremost.
Okay.
So a lot of things I'm going to say right now might not be very popular.
That's fine. You're not that popular.
And I also don't like sugarcoating either.
Exactly.
So let me just put this straight. Instagram is hurting a lot more people a lot worse ways because they give up before they even start. So I would say put away the social media and the comparison. Put that away.
Especially if the feed, just really quickly, Simos, let me just throw something in there. Social media could be really, really bad for you. On the flip side,
It could be really good for you.
it could be really good too.
If you follow the right things.
Because if you open up my feed right now in social media, all platforms, TikTok, Instagram, YouTube, you will see 2 to 3 types of videos. You will see sports videos, highlights from the Dallas Cowboys. That's my escapism.
Yeah.
It's what just gets me away from everything. The second thing will be some type of inspiring message.
Yep.
So I have, unless it's
Because you don't want to
snuck
hear
in,
you
and
don't
the-
want to hear negativity.
There's no negativity in my feed whatsoever. And even this other inspiring stuff, it's not people with a private jet.
Correct. Because that's not
It's-
inspiring.
It's just not inspiring.
Well, it's
to
also a
me.
lie.
Right?
But how about that? It's also a lie.
Possibly. Yes.
But it's not possibly.
Yeah.
It is a lie.
Great.
It is curated content
But-
to create FOMO.
So, but that's what I want. I want people to understand what you just said. That you will get what you put yourself out, whatever you put your thoughts to, you will bring about.
We
So
talked about
if that-
sugarcoating. If
right?
me
Go.
and you had a private jet, would we actually put it on social media? The answer is no. Nobody who has a private jet going about their business, living their best life, is putting it on social media.
Yeah.
That is a lie. It's fictitious.
My helicopter is on the helipad of the top of
Exactly.
the studio.
So
right now.
if you know as a fact that the only reason a videographer was hired to take an angle of a jet with you slowly walking up the stairs is for you to sell something,
Yeah.
you cannot be possibly that naive to fall to be jealous. That is not a real expectation for a 25-year-old man who is looking to go from renting to owning.
Yeah.
So if we were to just stop that right there and now actually talk strategies,
Yeah.
which involve meal prepping, house hacking. So you cannot, in an economy where inflation is killing everyone, and lunch is a bare minimum of $15 to $20 in Toronto now. Period. Not everywhere, but in this city, we can go to McDonald's. I just saw it on Instagram. $14.70 for a meal.
for a combo, which I paid $3.99 for.
So we're not talking about extra size or mega size or what have you.
Yeah.
A combo is $15. So if McDonald's, I was going to say McShetty's. So if McDonald's is $15, a restaurant is 25 to 30. A takeout at Metro at any grocery store is 12 to 15 to get a salad, some chickpeas and some chicken, whatever the case may be. If you are eating out, you will never buy a home. You don't get paid enough. So until your value prop as a human being changes
To the marketplace.
So until you're worth more,
Yeah.
and you will never be worth more unless you can invest in yourself and do certain things. And so house hacking means either you and 5 friends put a down payment together, occupy the premises, try to even occupy 2 rooms and rent out the rest, so you can actually graduate into a bigger property. It's the only way. It's the way I got my first home. The first thing I did is I bought it. I put a kitchen in the basement, and it was still connected. It wasn't even done properly. But the guy who I was working with moved in downstairs, so he gave me $100 a month for gas, gave me $900 a month for the basement. Things worked out. Then I met my wife. Then that household income became double because she was working. for the government. But if anybody's wondering how it was done, or did anybody start rich? Nobody started rich.
Yep.
Everybody comes from, like, we know exactly where you're from, where I'm from. Like, these are not maybe stories. These are real. Stop looking at garbage, fake stuff. If you want to be real about home ownership, it's not a right, it's a privilege. So the dream of home ownership is going to be a dream forever unless you act on it. And the only way 20-year-olds right now in a market this vicious, if you want to stick to Toronto, you can move to Newfoundland, find something for 200,000, no problem. But if you want to stick to Toronto, if this is your dream, where you're competing at 1.1, the only way to make it is by stop doing stupid shit at all accounts.
Well, I like the expectation part, right? Because we say 1.1, but not all real estate in the GTA is $1.1 million.
No, it's 500,000 for. So
there's a lot of $550,000 condos all over the place.
So why don't we give them? Why don't we give everybody an insider tip for December 2023?
Hang on one second. I want to go to Christopher for a second. Chris, what would be your one hack or one strategy that 25 to 35-year-old kind of person can take on?
Well, I think you guys have really covered it off. You've got to figure out how to spend less than you make. Period. It's the only way.
So simple.
It sounds so simple. It's not easy, and I respect that because it isn't. And you're right on with the math in terms of. But we were taught from very young that you had to figure that out to spend less than you make, and it's not easy. I'm not suggesting this is a walk in the park, but you have to figure it out. And if that means living in mom and dad's basement for a few years so that you can put some money away.
It is what it is.
It is what it is. If it means going to grocery shopping for groceries and not spending on Uber Eats and all these easy, fast things, right, on your device, which is not easy. I get it. It's not glamorous. It's not fun. But you have to make that decision to figure out how to spend less than you make to build up some savings.
And I want people to really understand you. If you've been listening to the podcast for the last few years, you've heard me speak about success leaving clues. People who have done what you're wanting to accomplish have left a lot of clues. They come through books, they come through mentorship, videos, YouTube. You can find them. You just got to go pick up those clues. I will never forget the day you told me in a hallway that you had a Toyota Camry for a very long time, and I knew, if you don't mind me saying, I knew you could afford a lot better car in terms of what people on the outside would think is a more expensive and luxurious car, but you stuck with the Camry because it got you from point A to point B. A few years your junior, I just went and in the last 3 months picked up a Toyota Camry. I'm at a place right now that I could even afford a more luxurious car, but I got the Camry to bring everything full circle because I'm thinking about my 10-year plan, and my plan is I want more people because more people allow me to do more things, and it's more fun, and I'm just in a happier state with more people around me. But the fact that I was able to now invest into a $15,000 Camry and not a $250,000 Lambo, no shots at anybody who has those, like, do you, Mazel Tov, whatever. But that allows me to now get more people. And so in terms of success leaving clues, thank you, Christopher, for leaving that clue for me because I needed to pick that up as well. Guys, we are approaching the holiday season. I know how busy your guys' schedules are. I want to say Merry Christmas, Happy Holidays, Happy Hanukkah, Happy Festivus for the rest of us. All that goodness to you, your family, to the viewers and the listeners. Thank you so much, and all that to you guys as well. Did you guys want to sign off on anything?
I just want to say that this is the first time we're doing a podcast collab, so this is going to be the Broker's Playbook end of year special, which is the visit to my partner's studio and an appearance on the Jazz Takhar podcast. So I couldn't be happier to be here with my two business partners in this world. So thank you for housing us. Thank you for your generosity and everything you do for us all year, Chris.
Thank you.
You're always there for us, supporting us and our clients. And Mr. Jaspinder, Takhar.
Thank you.
Another year in the books, Home Slice.
And we would be remiss if we didn't mention Christopher's beautiful, beautiful younger brother, like actual brother.
The
from
Jeffrey
the
Slightham.
Same mother. The Jeffrey Slightham. We love you, Mr. Jeffrey Slightham. And
I might have a grievance. Is this the time for a grievance?
No, I don't have the poll from Seinfeld.
Where's the chocolate bar?
We don't have the poll
Where's the
from
chocolate bar?
Seinfeld. Christopher, Merry Christmas to you and your family, brother. Thank you so much.
Thanks, Jazz. Thanks, Simeon. Thanks for having me
Bless
here
everyone.
today. It's a lot of fun, and congratulations on all your success. Really, it's a real honor to be able to work together, and you know, when we're all like-minded about taking care of people, thinking long-term, and you guys have done an incredible job. So it's an honor.
All right. We'll see you in the new year, family. Thank you, guys.
Take care. Thank you so very much for spending your time with us here at Broker's Playbook. This is a growing community. If you found value in this video, please invite others to subscribe and, of course, share the videos with. We'll see you soon.